Hi, I'm John Scriffiny with Florida Financial Advisors, and these are 3 investing myths we hear all the time. Myth number 1, I need to time the market. Yeah, this belief, it's pretty common. It's something that clients will bring up in meetings, and I think this one's definitely a myth. I don't think it's real. I've met with clients that try to time the market, and their accounts look a lot different than the ones that put their money into a fund and let it grow over a long period of time. What I'd say it's all about is not timing the market, but spending time in the market. Yeah, myth 1 is definitely a bust. One other thing about timing the market is people feel like they need to time the market when they're close to retirement, but really it's all about being prepared. You have a portion of your assets that's invested in the market and growing and taking on risk. And then you also have a portion that's very safe. So that way, when you're in retirement, if the market drops, you give it a chance to recover. You're able to spend time in the market and instead pull from that safe piece. And then if the market's ripping, you can just go ahead and pull from there throughout retirement. I need a lot of money to start. Yeah, so this is an interesting one. I would say the most important thing is starting. It's not how much you have when you do start. The most important thing is just getting that compounding going. And another thing I'd say is it's never too late to start, right? With whatever you have or wherever you are, the most important thing is just to start where you are, put it in a diversified portfolio, and let that thing cook. So some people use not having a lot of money as an excuse not to start. I even met with a prospect the other week, and he mentioned like, yeah, I don't know if working with a financial advisor makes sense. I don't have enough money. Be like, that's the exact reason why you should start investing and working with an advisor, is because starting early and sticking with it over a long period is really what drives the bus. And it's pretty interesting. So if you take a 65-year-old with 500 grand and you take a 25-year-old with nothing, even if the 25-year-old just puts away a couple $100 a month, as long as it's in a solid portfolio that's diversified, there's a good chance they'll outpace the 65-year-old, even if the 65-year-old is adding $30,000 a year with a starting balance of 500 grand. I'd say having a lot of money isn't the obstacle. The main thing to focus on is let's just get started, let compounding take over. Myth number 3, investing success is about finding the perfect investment. Unfortunately, I don't think there are any perfect investments out there, right? I'd say the main components of an investment are liquidity, performance, and protection. You'll never really find an investment that is an A+ at all 3. So I'd say finding the perfect investment isn't really the strategy. It's more so finding an investment that aligns with what your goals are and is a better fit than the other ones out there. I found some clients that are looking for the get rich quick scheme. Like, what is the magical solution to all my problems? What is the thing where if I just put money into it, it'll double overnight? I think there's investments out there that basically brand themselves as being able to do that. And I would say those are the investments that are most dangerous to invest in. What it's really about is patience, spending time in the market, and finding a strategy that's diversified and won't go to zero on you. As you can see, all 3 of those myths were busted. I hope you learned something today. And if you enjoyed this content, be sure to hit the like button and subscribe. See you guys in the next one.
This content is for informational purposes only and should not be considered investment advice. All investments involve risk, including loss of principal. Past performance is not indicative of future results.